Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Wednesday morning and the cues coming out of global markets are fairly mixed. We had a mixed close and the GIFT Nifty this morning hinting at a lower start for the Indian markets. Lots of stocks in focus. We'll be discussing that with our experts on the show. And of course, we'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will take them up. But before we go any further, let's take a look at the top stories at this hour. Wall Street ends mixed with the S&P 500 and Dow ending lower and the Nasdaq eking out slim gains. Banking stocks, however, come under pressure after S&P Global cuts credit ratings and revises outlook for multiple US banks. Higher treasury yields too continue to pressure stocks. Asian markets kick off the day on a mixed note with the Nikkei edging higher in early trade. The GIFT Nifty, however, is implying a lower start for the Indian market. Crude oil settles lower. Brent trades just below $84 a barrel as concerns over China demand recovery takes center stage. Gold, meanwhile, stays around the 5-month lows. In focus will be Brightcom Group, the preferential allotment matter. CEO Suresh Reddy and CFO Narayan Raju are barred from holding key managerial positions in listed companies. Suresh Reddy is also barred from the securities market. 22 others have been restricted from selling shares of the company by the SEBI. And India's moon mission, Chandrayaan-3, is on schedule to make history. The Vikram lander will attempt a soft landing on the lunar South Pole at about 6 p.m. this evening. If successful, it will make India the first country to have successfully landed on the South Pole of the moon. Well, those were the top stories, but let me get on board our first guest for today, Sanjiv Bhasin, who's the director at IIFL Securities, joining in this morning. Good morning, Mr. Bhasin. Very good to have you on the show. I want to first ask you, the markets have been stuck in a very tight range, 19,400 emerging as a stiff resistance. Do you think we have topped out for the time being and it would remain like a sell-on rally kind of market at least till Diwali going forward?
Yeah, good morning. So if you're missing the woods for the trees, who's tracking the Sensex between 19,400 to 19,600? It's the mid-caps that is making money. The mid-cap index is at all-time highs. And like the Chandrayaan, we have already made a landing on the moon. This is the Diwali for the mid-cap holders. And there's a saying, you can't run with the hares and hunt with the hounds. So you had to be invested in the last 2 months and take advantage of the global chaos to be there. Now, there is a thin line between what is happening on the macro level and what is the reality. We are aware that bond yields are at 15-year highs. The US itself doesn't know what to do. With inflation lowering and strong economic growth, the Fed is trying to see that jobless rates go up. You cannot have it both ways. So I think markets have learned to live with higher rates. There will be volatility, but please do not waste your time tracking the index because that is so dominated by HDFC Bank and Reliance that at the whims and fancy of those two stocks, the index will be range bound. It's the real money in the mid caps which is seeing new all-time highs.
Right, Mr. Bhasin, mid-caps, of course, have hit a fresh high. As you say, they are on the moon already. But, would you say that the valuations here are getting frothy and you have to be extremely stock-specific when it comes to the mid-cap arena? So anything that you're liking from this space now that one should look at buying at this juncture?
Look, the valuation argument will always remain. India is in an expensive market in the BRICS economies. You should be proud. You're landing on Chandrayaan. And you have the G20 summit next week in India itself, which tells you that the world cannot survive without India's demographic premium of self-consumption. Indian stocks have and will be at a premium. Reason being that you have a 15,000 crore SIP even in the month of July, which is where the index has made all-time highs. So the soothsayers have been waiting on the sides for corrections, which have not been possible. And there is an old adage, don't try and time the market, but spend time in the market. You are correct. We could be facing some resistance because of the global headwinds. As I said, yields at 15-year highs. But that does not take away the demographic premium on the anvil of a festive season, cars, houses, and the ancillaries seeing the strongest demand ever. And I think most foreigners are now allocating more capital towards India as a preferred destination. In this part, you can imagine what the index may be range bound for some time, but please read my lips. We are going to new highs before you can see. We will see 20,000 first and then we may see 19,000. That's the confidence I have. And the broader market will continue to outperform. Always you have to be stock specific. Rely on your RM or your broker or your PMS, because they do this job 24/7. And yes, there is a bit of risk, because risk always exists in the market. But like I said, being under invested or not invested is another big problem.
Right. When you say that we are, of course, confident that 20,000 will be hit pretty soon, which are the stocks or sectors one should be invested in when the index does hit that magical, level of 20,000?
Well, first, let me tell you what stocks I recommended on your show maybe 2 months back. GMR was 40, Escorts was 2,000, Tata Power was 200, and SW Solar was 310. GMR is 60, it's laughing its way to the bank. Escorts has hit a new high of 3,000. Tata Power is on the breach of 250, and SW Solar is 370. Reliance itself has announced 20 gigawatts with 5 gigawatts coming on stream in the next 5 months. SW Solar is the largest player in the world on MEP. They make 12% margin. That is a preferred choice. This stock can go to 700 by next Diwali. On large caps, I'm very bullish on Apollo Hospital. You can imagine average revenue per operating bed was 57,750 with an estimated increase of 8 to 9% every year. Secondly, Apollo Hospital is undoubtedly now expanding their pharmacy business online, which has been the milking cow, which has hurt the net profit. I think that has now reduced losses, and next quarter onwards that should be profitable. So Apollo Hospital is my top pick, because I'm very bullish on the hospital sector, as the insurance is going to play out a big way over there. You can look for a target of 6,000 coming by Diwali. Second pick will be mid-cap banks like Federal Bank. Federal Bank trades at almost one-time price to book. The management has sounded exceedingly confident. In the gold loan, they are taking more market share than any other bank. And I think Federal Bank is now poised for new highs. It had an old high of 145. I think 170 can come easily by the end of the year. Third would be a stock called IRCTC. I think, the rail traffic is just bound to increase. They've just tied up with DMRC for ticketing. 88% is the profitability EBITDA on the ticketing part. 36% is on NEER, which is 82% of the market share of water. And you can imagine the catering adds to 12%. You cannot but miss this big business of IRCTC. And last but not least would be again my preferred SW Solar. As a disclosure, these are 4 stocks which we have accumulated in this fall, and we have a vested interest in our clients and maybe myself also.
All right, those are the stock recommendations from Mr. Bhasin. But Mr. Bhasin, last question to you. I want to get your thoughts on Brightcom Group after the SEBI order, which has said that the CFO and the CMD cannot hold managerial positions, and there are restrictions on the selling of shares also by 23 people in total. But any thoughts on Brightcom going forward after the SEBI order?
No, we have avoided this stock from a long time as a disclosure, and I will not get into the nitty-gritties because there will be these cases. This stock has had a very, very murky past, and I don't know why people still get trapped, but I cannot comment on it since it's a prejudiced decision, and maybe SEBI's order will have more color on it. But please be careful on what you invest because of big names being there. You do your diligence or trust your fund managers. Mutual fund managers do this job 365 days like me and 24/7. So we always try and allocate enough capital so that you are safeguarded, and the fly-by-night stocks can give you easy returns couple of times. But when they hit you, they will hit you below the belt. So stay away from these, noise-making stocks where you hear big names have invested.
All right, that's the view. Then with that, Mr. Bhasin, thanks a lot for taking out time and joining in and sharing your thoughts with us. It's a pleasure chatting with you. Well, with that, let me also get on board our next guest for today, Mr. Vinay Rajani of HDFC Securities joining in this morning. Good morning, Vinay. Great to have you on the show. As I was mentioning, the Nifty has been struggling to, get past or close above that 19,400 mark. And the GIFT Nifty also hinting at a pretty muted start for the Indian markets today. Would you expect the Nifty to once again remain below this level, or do you think we could see some bit of movement on the higher side?
Yeah, good morning, and thanks for having me on the show. So, as Sanjiv sir said, that focus is totally on the mid cap and small cap segment, and mid cap index is at all-time high, and small cap index is at the highest level. I'm talking about the Nifty small cap index. It is at the highest level since the rally started from the March lows, and it is couple of percentage away from its all-time high, which was seen in January 2022. So, totally focus is there in the small cap and mid cap, and breadth of the market is quite strong. So traders are minting money there. And as far as index is concerned, benchmark indices like Nifty and Bank Nifty into consolidation zone. And there is no activity from the derivative side also for last 3-4 sessions. So it has stopped going down. But the resistance, as you said, that 19,400 is a strong resistance, which is derived from the downward sloping trend line on the daily chart. And Nifty is getting support on its 50 days exponential moving average, which is currently placed at 19,274. So currently Nifty is in a range of 19,270 to 19,450 odd level. Unless we see breakout on the either side, the momentum will not be there and direction would not be there. So we have to wait for the breakouts on the either side, and probability of breaking out is higher on the upside because the breadth and the overall advanced decline ratio, then small cap, mid cap indices are showing very good strength. So I am expecting a bounce back, but when it is come, it will come. It is very difficult to say, but conditional levels are there. Sustainable level above 19,450 would bring some momentum in the Nifty, and in that case we can expect some short covering in the Nifty. And as far as Bank Nifty is concerned, I think 44,200 is a level to watch out for on the upside. Once that is taken out, we can expect a short covering in Bank Nifty. So currently these benchmark indices are into consolidation, and traders should more focus on small cap and mid caps and stock specific actions.
All right, that's the view then on the Nifty and Bank Nifty. But let me get in some queries that are coming on our feed. Starting with SJS Enterprises, of course, there was a block deal, 30% stake offloaded by the promoters at 600 rupees per share. There's some marquee names that have bought the stake, SocGen, Morgan Stanley, HSBC among those names. We have a query coming in from Selvan KBB on our feed, wants to know your thoughts on where the stock is headed from here. Yesterday, it managed to come off lows and end higher by about nearly 4% or thereabouts. Would you expect more, upside going forward, and expect the stock to test levels of 677? That was the 52-week high on the stock.
Can you repeat the name, please, Nandita?
SJS Enterprises.
SGS.
SJS. We had a promoter block deal in the counter yesterday.
Sorry, Nandita, I could not open the chart of that, so I would not be able to answer on this question.
Sure. Then what about Vodafone Idea? I mean, there are, the company has said that it would be looking to, repay dues to the tune of 2,400 crore rupees to the government by September. Where do you expect Vodafone Idea to head from here?
So there is no clear direction in this particular stock, because recently we saw that it hit a high of 9.15 and has come down to 7.70, and I see a strong support around 7.15. So it's a stock below 10 rupees and difficult to judge the direction on that. But currently it placed around its 50 and 200 days EMA. So we can say that it is at a crucial juncture, and 7 approximate figure, you can take a 7 as a support. So unless this level is breached, we can hope for the bounce back from this particular stock. So 7 is a crucial level for Vodafone Idea. On the upside, as I said, 9 is a crucial resistance. So there is no momentum, there is no clear-cut direction on the stock. But those who are holding this stock can hold this particular stock with a stop loss of 7 rupees.
All right, that's the view on Vodafone Idea. Then want to get in your thoughts on the Adani Group of stocks. We have a query coming in from Rohan Jagtap. He has bought Adani Enterprises shares at the rate of 2,520 or thereabouts, and he wants to know whether it would gain more momentum above the 2,700 level, and he wants to know whether he should hold on for 2,700 plus levels or book profits now. Adani Group of shares have seen quite a big up move over the last few sessions. Would you expect, or would you advise investors to hold on and wait it out before booking more profits into it?
Yeah, so trend of the Adani Enterprise is clear-cut positive. Support I see is around 2,570. So keeping that stop loss in mind, one can continue to hold on this stock, because momentum is there. For last 4 sessions, it has been rising, and indicator oscillators and moving average setup and price setup is quite strong on the chart. So I would suggest that one should continue to hold, and if stock continues to rise, then trailing stop loss should be held. So I think as of now the stop loss should be kept at 2570, and as we see a rise in the stock, we should continue to trail our stop loss. So that is the right strategy for the trading. So it is there into uptrend, and momentum is also there. Volumes are also building up. So I am bullish on this particular stock with a stop loss of 2570.
Right, that's the view. Hope that answers your query. But, there's a query coming in on Dixon Tech. Now, this stock has been on fire. It's been up 25% in the last 1 month or thereabouts. We have a query coming in from Sunil Bhargav. Wants to know where the stock is headed. Would you say that it's headed for, higher highs, given the fact that it's very close to, in fact, yesterday itself, it had hit a fresh 52-week high?
Yeah, so a technical setup is quite strong, and we have seen a flag pattern breakout on the daily chart, and primary trend was also positive on the weekly and monthly chart. It has been forming higher tops and higher bottom. So on every aspect, looking at the oscillator indicators, moving average setup, it is looking strong. And the all-time high for this stock is placed at 6243. That is the only resistance I see positionally, because it has recently surpassed the previous top resistance, which was placed at 4670, and now it is heading towards and marching towards its all-time high. So technical positional setup is quite strong. There could be a running correction at regular intervals with the markets, but I am expecting this space to do well. Overall support I see positionally, there is a strong support at 4585, which was the previous swing low on the charts. So that could that level could act as a positional support. But looking at the overall setup, I believe that it is heading for the next all-time high levels, and technical setup is quite good, and I'm expecting this stock to outperform.
All right, expect outperformance to continue in Dixon Technologies. The next query I want to take up on Rajesh Exports. Now, this stock has been under pressure. In fact, just coming off its 52-week lows. If somebody is holding on to this counter, would you say that it's time to, exit, or would you advise them to hold on to it? This query is coming in from Abhishek Wagh.
Yeah, so basically we have seen a rise of more than 36% in the Nifty small cap index since we saw a bottom in March 2023. So after a rally of 36% in small cap index, and mid cap index is already trading its all-time high, this kind of stock is continuously underperforming and staying below its 20, 50 and 200 days moving average. So it is clear cut into a downtrend. The recent swing low was around 500 odd level. So strict stop loss should be there. It is looking weak on the charts. There is no doubt about it. On technical aspects, on every aspects, it is looking weak. So those who are holding should keep a tight stop loss at 500, because in this kind of scenario also the stock is underperforming. So 500 is a stop loss I'm advising for the traders, and it is not looking that. In fact, it is looking quite weak on the chart. So fresh traders should avoid, and all those who are already holding, I think 500 should be the stop loss for the stock.
All right, that was the view on Rajesh Exports. But, there's a query coming in on BHEL from Harshal Tatia. Wants to know your thoughts on this stock. Yesterday, of course, it hit a fresh 52-week high. It was up 10%, but today it will be in the F&O ban. So what kind of an impact would you expect on the stock? Would it come under pressure today?
So there could be some muted activity after getting into ban, because we saw in the history that after rising so much, if it comes into F&O ban, it goes into consolidation or running correction. But overall, the trend of the PSU and power stock is quite strong. So sector strength is there, and stock has been doing well and technically still looks strong. So for traders, it could be consolidation or running correction, but primary trend is quite positive. So those who are holding for the delivery and investment can continue to hold, as stock is looking very strong. And positional resistance, positional support I can see is around 91. So on dips, one can continue to look for the buying opportunities. So overall setup is good. We can expect some running correction, and for short-term traders, support comes in around 104 odd levels. Current levels are 111. So up to 5-6% correction could be there. But frankly speaking, if it comes, then only we should look forward. I'm not advising any short positions, because overall trend is quite positive. But 104 is a short-term support, and 91 is a positional support that swing traders should look.
All right, that's the view on BHEL. Let's talk about Sula. We have, the promoters selling nearly 1% stake in the counter, and the stock has been pretty much upbeat given the fact, in fact, it has been in high spirits recently on the Independence weekend. It did clock, record revenues. And, the stock has been doing pretty well. From now here on, do you expect the stock to head towards a new high, or how should one trade into this counter?
So currently the stock is into consolidation for the short term. The recent top was 535, which is the all-time high for the counter, and recent previous swing low is placed at 464. So between 464 to 535, this is the range for the short term, and we need to see whether it is breaking out from that range or not. Yesterday's close was quite strong, but I see a consolidation between this range. So better to wait for this the news which we are talking about. We have to see how it reacts. But 535 is a strong resistance and 464 is a strong support. So it is into a range, and we have to see how it reacts in today after today's news. So not in that much momentum as compared to the other small cap stocks.
All right, 535 crucial resistance to watch out for on Sula. There's a query coming in on Hindustan Aeronautics on our feed. Hemant has written in, wants to know, what is the view on the stock for the next 1 month. Now, defense stocks have, lost a bit of mojo. Over the last 6 months, they've done pretty well. But over the last couple of months, they have lost their mojo, so to say. But, specifically for HAL, how does the going look like for the stock over the next 1 month?
Yeah, so no doubt for last 2 months it has not been moving, but it is not falling also. That is a good sign. And being a part of defense sector and also a PSU, the entire sector is strengthening day by day, and index is hitting an all-time high day by day. So overall strength is there, and the stock is placed above all important moving averages like 20, 50 and 200 days EMA, and sector is outperforming. And I see a strong support around 3700 for the short term. So unless that is breached, we should remain bullish only, and we can hope for the upside breakout. Breakout would come only if the stock crosses a level of let's say 3930. So 3930 is a strong resistance for the short term, but overall I am expecting a breakout on the upside only because primary trend is positive and sector is doing good, and defense and PSU both sectors are performing very well. So considering that, I am expecting to break out on the upside, and short term traders should keep a stop loss at 3780.
All right, that's the view on HAL. Hope that answers your query. I want to also get in your thoughts on an REC, which has been doing fairly well. Rakesh has written in, wants to know whether or not it's the right time to enter into the stock with a time horizon of 6 months to 1 year. What would you advise him to do?
So this stock has rallied strongly from the low of 72, which was seen in June 2022. So from 72 to 238, it's a quite liquid stock, and you can say one of the large cap stock in the PSU and power segment, power finance segment. So no doubt the technical setup is, without any doubt, it is looking strong only, but it is not like that on every level buying is advisable. So risk reward ratio is not favorable. I think those who are looking for buying in this particular stock should wait for the proper correction, and then buy on dips can be applied. So at this level, I don't see any risk reward ratio on the favorable side. So dip should be bought into. I think if stock falls down to, let's say, 215 odd levels, then one can look for fresh longs. But at this point of time, it looks quite overstretched, and RSI and other oscillators are also in the overbought zone on the weekly charts. So no doubt the trend is positive, but I would rather wait for proper correction to come, and buy on dip should be applied. And the support which I see around which we can consider going long is the 215 for the REC.
All right, that's the view on REC then. But I think we just about have time for one more query. This one is coming in from Vijay. Wants to know your thoughts on Nuclearsoft. This stock hasn't really done all that well over the last month or thereabouts. How should one look at playing this stock now? Its 52-week lows was 365, heading towards its 52-week highs, but still not quite there yet.
So you're talking about Nuclearsoft, right?
Nuclearsoft, right? That's correct.
Yeah. So for last couple of months, it has been consolidating, but it is down, but you can say it is not out, because on the positional chart, it looks very strong. And I see a strength in the mid-cap IT space. So currently large cap IT space is underperforming the overall markets, but there is a strong setup on mid-cap IT stocks. So one of the stock is Nuclearsoft. So for no doubt for last 3 months, it has done nothing. It is consolidating, but I think this is a nice opportunity and good opportunity for traders to initiate fresh long positions also. So there is a gap which can act as a support between 925 to 850. So there is a big gap in between this range, and it has reached near to that range. So I see one can create long position, and long key positions can be created with a stop loss of 945. So after this 3 months of consolidation, I am expecting bounce back in this counter, and one should continue to hold on the existing longs, as well as fresh traders can initiate a long position with a stop loss of 945.
All right, that's a view on Nuclearsoft. This brings us to the end of the query segment, but give us some stock recommendations for our viewers this morning, Vinay.
Yeah, so I'm looking for 3 stocks on the long side. First would be Tata Communication, which closed very strongly yesterday. It was up by 4.5%. Volume setup and price setup was quite convincing, and primary trend is already up. So Tata Communication can be bought at 1782. Stop loss can be kept at 1750. On the upside, 1835 should be the target for the trading. Second pick would be from the auto ancillary space, Minda, which is trading around its all-time high. So around 637, one can go long with a stop loss of 620. On the upside, 665 should be the target. The third pick would be Indian Glycol. This stock has given a flag pattern breakout on the daily chart with a volume, so which confirms the overall momentum in the counter on the upside. So 755 is the current level around which one can go long. Stop loss can be kept at 730. On the upside, I'm expecting a target of 799. And all these 3 recommendations should have a time frame of 2 to 4 sessions.
All right, those are the stock recommendations coming in from Vinay. With that, Vinay, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.
Thank you.
Before I let you go, of course, we'll have a new listing today, TVS Supply Chain. Of course, the IPO was subscribed 2.8 times or thereabouts, and the issue price, the final issue price that was set was at 197 rupees per share. Now, the grey market premium is hinting at a muted debut for TVS Supply Chain, so watch out for this listing at 10 a.m. But the big news today, of course, is the India's moon mission Chandrayaan-3 is on schedule to make history. Now, the Vikram lander will attempt a soft landing on the lunar south pole at about 6 p.m. this evening. If successful, it will make India the first country to have successfully landed on the south pole of the moon. Of course, we will be getting you live coverage of this historic event at 5 p.m. onwards. So don't forget to tune in on Money Control and catch all the action. But well, with that, we've come to the end of this edition of Morning Trade. From the entire team that put the show together, thanks a lot for watching. But don't go anywhere, because coming up next is Opening Bell.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Money Control is bullish on India. Join the campaign. Tweet to us with #MC Bullish on India.